Good morning, ladies and gentlemen. My name is Michalis, and here we're looking at the Nasdaq on a 3-hour time frame, which is mainly used as a medium-term analysis time frame. Here we can see that we're using trading clouds, also known as a regression channel, a free-zone regression channel, which is formed from multiple exponential moving averages. We can definitely see that the Nasdaq, especially since the CPI announcement last week, has seen a lot of bullish price movements. We have seen bullish price movements throughout most of January, which is mainly being driven by the lower inflation, indications from the Federal Open Market Committee that they're going to opt for a 25 basis point hike, which is a big difference to 75 basis points that we were looking at last year, and also 50 basis points that we saw in the previous month. But what we want to do is look at how we can use this regression channel and the trading clouds as indications within regards to how the price may potentially move going forward. So at the moment, we've got the three zones: the trend zone of the regression channel, we have the retracement and the support zone of the regression channel, and then we've got the change of trend zone, which is this gray area here. So basically, if the price is moving within the trend zone of the regression channel, then there is high possibility that the price may find bullish price movement again over the next few trading sessions. Now at the moment the price is within the trend zone of the regression channel, but keep in mind that the price did decline over the past two trading sessions. So we can see that the regression channel is not widening, but it has become smaller. So this area is really an area that we have to be cautious about, and be cautious about the direction that we're trading. And we're going to get a better understanding on this when we switch on to a smaller time frame. Now we can also see that the trend zone of the regression channel is also forming a major support level. So we can see as we approach the orange zone, the support zone of the regression channel, that the price and the trend is finding support. We found it on one occasion here, on a second occasion, and on a third occasion. Now as the price declines and is very close to also forming a symmetrical triangle pattern on smaller time frames, for example on the 1 hour time frame, we need to keep into consideration that as it declines and it moves into this support area, that the price after a dip potentially may find some support. Now, if it doesn't find some support and the price does continue to decline, and especially if it goes to the change of trend zone and the green moving averages actually start to cross over downwards from the gray moving averages, then of course we've got an indication that the price may actually form a price correction or an Elliott wave style downward price trend. What we can do, the trend and within regards to trades, is that we can switch onto a smaller time frame to get a better understanding of the price condition. But we can see from the trading clouds and the regression channel that it is still in the trend zone. It has declined, but it is declining towards the support area of the indication. So we need to keep in mind that the price is declining, but it may find support. If it doesn't find support and actually gains momentum, then of course we're looking at a different scenario in the market. Now here on the 30-minute time frame, we're still looking at the Nasdaq. You can see what I'm referring to within regards to the symmetrical triangle pattern here. Now on this chart, we've got two moving averages which are mainly being used as crossovers, so trend indications. We've got a 100-day moving average which is mainly being used as a price sentiment line. We have Ichimoku trading clouds, and we've also got a stochastic oscillator down here as well. So what we want to do is use this as an indication to obtain indications as to how the price is likely to move. So at the moment we're within the Ichimoku trading cloud. So the Ichimoku trading cloud is basically telling us that the price can move in either direction at the moment, which basically means that we can look at breakouts, either bullish breakouts or bearish breakouts. Now, if we look at a bullish breakout, so a breakout of the trading cloud upwards, then we've got potential indication that the price is going to move upwards. If we get a downward crossover, so if we get a bearish breakout, then potentially we're looking at a price correction, in which case it may correct all the way back to the previous support level. Now, when we're looking at the crossovers, we're seeing two potential price movements. When we're looking at the crossover on the stochastic oscillator, it has actually crossed over upwards. So we have an indication that the price throughout the day may potentially find some support and some bullish price movements. But when we're looking at the crossover on the moving averages, the moving average has actually crossed over downwards. Now, the crossover downwards was early in the Asian session. Of course, it has moved downwards for quite a few hours now. It's moved approximately 0.40% on the bearish side. So now we can see that we're in the trading cloud. It can break out in either direction. The crossover of the moving averages has indicated a retracement, but the stochastic oscillator has indicated that the retracement is coming towards an end. So we can potentially use breakouts to give us indications of how the price is going to move. Now we can use the trading cloud, Ichimoku trading clouds, to give us an indication. So for example, if it breaks out from the trading cloud, then we can aim for the next resistance point, which is up here. Or if it breaks down the trading cloud, then we can aim for the next support area, which is all the way down here. So you can potentially use the breakout of the trading cloud, or you can either use the breakout using the previous price waves. Now, if you're going to use the previous price waves, the bearish breakout is more or less the same as the trading cloud. So you can see the support area here. If it breaks from this support area, then you can trade a decline all the way back to the previous support area. If we get a bullish breakout, we're looking at the breakouts of this resistance point here, in which case if you're breaking out from this resistance point, you can aim for the next resistance, or if it breaks out from that next resistance, then of course you can look on a larger time frame at a different resistance point. So here at the moment, ladies and gentlemen, you can see that we potentially may get price movements in either direction. At the moment, we're trading in the middle of the trading cloud. We may get breakouts from either direction, but currently on the larger time frames on the regression channel, we're still in the trend zone. And even if we get a slight decline, we will approach the support area of the regression channel. So hopefully this video was educational and gave you some information from the technical side of the Nasdaq and the Nasdaq's price condition. Keep in mind, we have officially entered into earnings season. We've got Netflix earnings, which is also related to the Nasdaq, which is going to be released on Thursday after trading hours. So of course, this is going to create a lot of price volatility. And again, this is why potentially we may be looking at breakouts. But hopefully you found today's video educational. Trade safe, trade responsibly, and hopefully we'll see you very soon on our next video. Goodbye.